Over 1.2 million Canadian mortgages are renewing in 2025 and 2026. The Bank of Canada calls this the largest renewal wave since the pandemic stress test began. Most of these homeowners locked in between 2020 and 2022 at rates between 1.5 and 2.5%. They're renewing in rates above 4%. And the payment shock is breaking budgets. I know of an accountant and a designer in Etobicoke that bought a semi-detached in 2021 for about $985,000. Combined income, $225K. They locked in a 5-year fixed rate at 1.94%. Their monthly mortgage payment was about $3,300 on a $785,000 mortgage. Comfortable. They could save, travel, invest. Life was good. Their renewal date is August 2026. The best 5-year fixed rate their broker can find today, 3.99%. Due monthly payment on the same mortgage, $41.25. That's about $800 more per month, almost $10,000 per year. They did not lose their jobs. They did not overspend. The rate changed. Now multiply that by 1 million households. The Bank of Canada estimates that 60% of all outstanding mortgages will renew in 2025 and 2026. 5-year fixed rate holders face average payments increases from 15 to 25%. For a typical Toronto homeowner, that's about $5,100 more per year. I ran the exact math on 3 different Toronto mortgage sizes. The numbers are worse than most people expect. Let me show you what the renewal looks like at 3 different mortgage sizes. These are the most common ranges for Toronto homeowners who are locked in between 2020 and 2022. Scenario 1, $500,000 mortgage, locked in at 1.89% in 2021. Monthly payment, $2,091. Renewing at 3.99%, $2,627. Increase, $537 per month, $6,439 per year. Scenario 2, $750,000 mortgage, locked in at 2.09%. Monthly, $3,209, renewing at 4.09%. $3,982, increase, $773 per month. That's over $9,000 per year. Scenario 3, $900,000 mortgage, locked in at 1.94. Monthly, $3,785, renewing at 3.99%, $4,729. Increase, almost $1,000 per month. It's $11,000 per year. So none of these people did anything wrong. They qualified at the stress test rate. They could afford the payment at the time. A 2% point rate increase on a large mortgage is not a rounding error. It is the second car payment that appeared on their budget overnight. And this is the optimistic scenario. These numbers assume you locked in at 5-year fixed rate. If you took a variable rate and have not yet converted, or your HELOC balance is above $100,000, the numbers get worse. Variable rate mortgage holders already felt this. If you took a variable rate at prime minus 1% in 2021, your effective rate was about 1.45. Prime is now 4.75. Your current rate is 3.75%. That increase already hit your payments months ago, or even more than that. The Bank of Canada says variable rate holders with variable payments could see an average payment decline of 5 to 7% as rate cuts take effect. But that only helps if the bank keeps cutting. And right now, the bank is holding at 2.25%. The next decision is June 10th. Markets are not pricing in another cut until late 2026. The HELOC at prime plus 0.5% went from 2.95% in 2021 to 5.25% today. On a $150,000 HELOC balance, that's an extra $288 per month in interest alone. You're not paying down principal on a HELOC, you're renting money. And the rent went up 78%. If you're carrying both a mortgage renewal and a HELOC balance, the combined payment shock can exceed $1,200 per month. That is $14,400 per year. And that's after tax money. So for a household earning $170,000, that wipes out 8.5% of gross income. Your bank will send you a renewal letter 30 to 60 days before your maturity date. That letter contains a posted rate. The posted rate is higher than what you should accept. It is a starting point, not a final offer. Posted 5-year fixed rates from the big 5 banks range from 4.79 to 5.29% right now. Discount rates from mortgage brokers are about 3.99 to 4.29%. That is about 0.5 to 1% difference. On a $750,000 mortgage, the difference between 4.79 and 3.99% is about $332 per month, almost $4,000 per year, and about almost $20,000 over 5 years. Your bank is counting on you signing the renewal letter without shopping. Industry data from Mortgage Professional Canada shows that over 60% of Canadians renew with their existing lender without comparing rates. That is thousands of dollars in unnecessary interest over the term. Here's what to do. 90 days before your renewal date, call a mortgage broker, not your bank. a broker. They have access to 30 to 40 lenders and can show you the best rates available for your situation. Your bank shows you one rate, theirs. Get 2 or 3 rate quotes in writing. Then call your bank and tell them you have a competing offer. In my experience, the bank drops their rate by 0.3 to 0.5% when they know you have options. That alone saves you $150 to $250 per month on a $750,000 mortgage. Again, this is not financial advice. Check with your bank and your mortgage broker. That Renewal playbook is worth thousands if you use it 120 days out. I put out new videos every week with real numbers on Toronto real estate that your bank and lender are not telling you, and also a lot of real estate data. Subscribe to catch the next one. I'm just shy of 700 subs. I need your help to get there so I could keep on making videos just like this. The renewal wave does not just affect individual household. It reshapes the market. Talk about forced selling. Homeowners who cannot absorb the payment increase have 3 options: cut expenses, refinance, or sell. CMHC data shows the number of mortgages consumers in arrears in the GTA hit about just shy of 3,000 in Q3 of 2025. That is up 45% year over year. 3 years ago, that number was 662. More than 4 times as many Toronto homeowners are now behind on payments. That translates to more distressed listings, more inventory, more negotiating power for buyers. Investors exits. Investors who bought condos at low rates to rent out are getting squeezed hardest. Their carrying costs are now exceed rental income. TRREB Q1 2026 shows the condo benchmark price down 10% year over year. Condo inventory sits at 5.4 months of supply. That's firmly in buyer territory. The investor exit is dragging down values across entire buildings. Price softening in detached. Detached homes in the 416 are down 3 to 6% depending on the pocket. But the softening is uneven. Western premium areas like the Junction, Bloor West are holding better than inner suburbs. East End pockets like Birchcliff, Wexford, and Clearly are seeing the most motivated sellers. For move-up buyers, those are the neighborhoods with the best negotiating conditions right now. If you're a homeowner with equity and stable income thinking about moving up, this is your window. The renewal wave is creating the inventory you need on the buy side. And the rate environment, while higher than 2021, is still historically moderate. The Bank of Canada policy rate is 2.25%. In 2007, it was 4.5. Step 1, start 120 days out. Mark your renewal date on your calendar. Set a reminder 120 days before. That gives you time to shop rates, negotiate, and switch lenders if needed. Switching takes 30 to 45 days for processing. You wait until the bank sends you the renewal letter, you're ready to have lost half your negotiating window. Step 2, get 3 rate quotes. Call a mortgage broker. Call your bank. Write down the best rates from each. The spread between them is your negotiating leverage. I've seen spreads as wide as 0.8% between the worst and the best offers on the same mortgage. Step 3, negotiate or switch. Your bank offers is more than 0.2% above the best broker rate. Think about it. The penalty for switching a renewal is 0. You're not breaking a mortgage. You're choosing not to renew. There's usually no cost, but double check that. Your bank will try and make you feel like switching is complicated. It is not. The new lender handles the paperwork. Step 4, consider your term. Bank of Canada's policy rate is 2.25%. Markets expect the bank to hold through most of 2026 with a possible cut later in the year. A 3-year fix at 3.79% might beat a 5-year fix at 3.99% if rates drops further in 2027 and 2028. A variable rate at prime minus 0.5%, currently around 4.25%. Could save you more if cuts continue. Talk to your broker about the trade-offs for your specific situation. One more thing on timing. If you're renewing in the next 12 months, you might be able to rate hold. Most brokers will lock a rate for 90 to 120 days with no commitment. If rates go down before closing, you get the lower rate. If rates go up, you keep the lock rate. There's no downside to holding a rate early. Here's the part most people miss. Your mortgage renewal is not just a rate decision. It is a life decision. If you're renewing this year, ask yourself, do I want to lock in for another 5 years in this home? Because that is what a renewal is. It is a 5-year commitment to this property. If you're in a condo and you need more space, or you're in a semi and you want a backyard your kids can play in, your renewal date is the cheapest time to make that move. Selling and buying costs money, land transfer tax, legal fees, moving costs, realtor fees. But those costs exist whether you move now or in 3 years. The variable is the rate you lock in. And the rate you get on a new purchase mortgage is the same rate you would have renewed at. The only difference is the address. So that accountant and that designer I mentioned earlier, they ran the numbers. Renewing their semi at 3.99% means about $4,000 per month on the remaining balance of $657,000 over 20 years. They looked at selling the semi and buying detached in Wexford for $870,000. With $330,000 in equity from the sale, their new mortgage would be $540,000. Monthly payment at 3.99% over 25 years, $2,800. Lower payment, bigger house, more space. So they moved a few months ago. That math works because of two things. First, 5 years of payments reduced their balance. Second, selling a semi in Etobicoke at current prices gave them enough equity to put a large down payment on a detached on the east end, a more affordable pocket. Obviously, you had to be okay with the neighborhood. The renewal was the trigger to force them to run the numbers. And the numbers said move. 1.2 million renewals, $500 to $900 per month in payment shock, depending on your mortgage size. Your bank is counting on you not shopping. Your renewal is your move up trigger. You use it right. Start shopping. 120 days out. Get 3 quotes. Negotiate or switch and decide whether you want to spend the next 5 years where you are. Thanks for watching. See you soon.